Tesla's earnings are just hitting the wire. Let me bring you those headlines right now. Q3 adjusted EPS looks like it's clocking in at 50 cents. That's versus consensus at 54 cents. Looking at the top line though, Q3 revenue, it looks like 28.10 billion. That is a beat. The street was closer to 26.36 billion. I'm just looking for Q3 gross margins. That also looks better than expected. I see 18% versus an estimate at 7.2%. Q3 free cash flow, there it is, 3.99 billion. That is a beat, a healthy beat. The estimate was 1.25 billion. The stock, at least initially here, we're down marginally about 1.3%. Of course, keep in mind, this stock had made a run into this print. It was up about 80% in the past 6 months. Big questions, of course, investors are dealing with now. What does EV demand look like in this post-EV tax credit world, especially in the US? We're going to hear a lot more. We want to hear a lot more from Elon Musk about how business is going in China, what the competitive landscape is like there. And away from the EV business, you're looking for any color and commentary you have on robo-taxis, humanoid robots as well. That'll all be in focus on the call. Well, Tesla Q3 earnings, they are coming out moments ago. Let's bring in out Seth Goldstein, Senior Equity Analyst at Morningstar. Seth, the headlines have dropped. You got the results. Walk us through your initial reactions here, Seth. What do you make of the report?
Well, there's few surprises from the report. We would expect, following the strong deliveries numbers, for revenue to be up, and we'd expect gross profits to be up sequentially and for profits to bounce back following a week's first half start to the year in Q3. But the big question for me is there was really little commentary in the shareholder deck as far as what's the robo-taxi rollout plan, and what I want to hear on the call tonight, what management has to say about the plan to move into testing and to move from early testing, where we still see geofenced area and safety drivers, to more advanced testing where we might not see safety drivers, similar to what Waymo does in their actual operations right now. So I have a lot of questions. I'm hoping management answers on the call, but the initial numbers were not a surprise at all, given what we saw from deliveries and energy deployments earlier this month. So
looking ahead now, Seth, here's my question is what do we think Tesla EV demand is going to look like in the quarters ahead here in the US in this post-EV tax credit world, Seth? We did have some Tesla analysts, financial analysts on the show this week. They were forecasting you could see, in their opinion, some softness. What do you think?
I think we're likely to see Q4 deliveries decline and total deliveries globally for Tesla to decline in 2026, largely due to the U.S. tax credit expiration. If you go to a similar early EV adoption market where Germany was in 2024 last year, the German subsidy expired at the end of 2023, and we saw EV sales fall countrywide double digits in 2024. And I think we're likely to see the same thing in the U.S. starting in Q4 and through the first 3 quarters of 2026, because I think many buyers who wanted an EV likely took advantage of the tax credit, bought one in the third quarter, and so we're likely to see at least a few quarters of pull forward demand that occurred last quarter. So I think we're going to see a fairly weak EV sales throughout the country for all automakers over the next several quarters, and as Tesla's the market leader, they're going to be the most impacted.
Now, bulls might counter, Seth. They say, well, hold on, Seth. We have those lower priced models coming. That's going to boost volumes here in the U.S. What do you say to that?
Well, Tesla did release 2 models that are now under $40,000. So for buyers who are in the higher end of the more affordable vehicle category, you could maybe choose a Tesla, but it's still at the higher end of that price point. If you compare the Model Y at about $40,000 at the lowest level to, say, a Honda CR-V, Toyota RAV4, those start with the lowest level models at $30,000. So you're still asking buyers to pay up for a vehicle that is frankly not as good as what you get for the Model Y with the subsidy last quarter, because it's a more stripped down version. There's features that are not there. It's a longer charge time. It doesn't have extra features like rear view screens. So, they may sell well and you may get some buyers who were interested in EV and wanted the cheaper price point, but I still think you're asking people to pay up versus the median price of the midsize SUV category. And so that's why I think sales are still likely to fall.
Now, we've been talking here, Seth, about EVs. Of course, there are many Tesla shareholders, investors, fans, Seth. They're in it because they believe in Musk's AI vision and what they see as the great AI opportunity. Dan Ives over at Wedbush Now we know Dan, right? We Tesla bull of Tesla bulls. Here's what he told his clients. He says, we continue to strongly believe the most important chapter in Tesla's growth story, he says, is now beginning with the AI era. It's here, Dan says. It starts with autonomous and then robotics, and we believe the autonomous valuation is worth $1 trillion alone to the Tesla story over the next few years. What do you say to that, Seth?
Well, I think that's a very bullish view, and we believe long term in the Tesla AI story. In fact, of our $250 fair value estimate, over half of it comes from full self-driving subscriptions, robotaxi, and Dojo. And so we think that this is an important driver for Tesla, and we think Elon Musk will successfully pivot the company over the long term from selling cars today to software and robotics in the future. That being said, we don't assign as high of a valuation in our base case to what Tesla can get from robotaxi. Remember, Tesla is not the only entrant like they were when they entered EVs last decade. And they don't have the first mover advantage because Waymo's already here. We also see regulatory uncertainty surrounding autonomous driving on robotaxis in Europe, and they likely won't be the market leader in China due to data export issues, making them not able to have their latest full self-driving software in China at any given time. So I think Tesla is not coming from as big of a first mover advantage. And so while we think they're likely to grow and maintain a big share of the ride-hailing market in the US over time, we do think that it won't happen starting next year. We still think testing is in the early stages, and we think the recent market rally is pricing in a lot of the optimism, a lot of the upside, assuming Tesla gains market share next year and becomes a successful entrant into robotaxi. And we just see a smaller valuation opportunity for Tesla here.
I'm interested, you're a financial analyst, so when you look at that robotaxi business, what are the kinds of data points, what are the kind of financial metrics, Seth, that you're looking for to try to gauge what kind of success they're having?
Well, the biggest thing I'm looking for is not financial right now. It's does the software work and can it work safely and can it work as intended, meaning without a safety driver in the vehicle and without a geofenced area. And if so, then can Tesla quickly expand and navigate the regulatory permitting issues to roll out? And so that's what I'm looking for right now. If the software is successful, Tesla will be able to monetize it like Waymo has done. And we expect that Tesla and Waymo will offer cheaper rides versus, say, an Uber or a Lyft, and use that as a way to convince new users to try it out. And once new users have a good experience and realize it's just as safe as riding with a human driver, we think adoption will grow in every new city in a pretty quick time frame. And so I would expect Tesla to be successful once the software works. But the big question for me is, when will the software be ready? Currently, I still think it's in early testing, and I want to see, Tesla's plan for being able to remove the safety driver where regulations permit to give me more confidence that we're going to see a full launch in the next year.
Seth, finally, that shareholder meeting is coming up November 6th. You expect shareholders to approve Musk's potential $1 trillion pay package. What do you think is going to happen?
I think we're likely to see the measure get approved. We saw the 2018 pay package get approved by a strong majority last year at the shareholder meeting. And this is really an extension of that package. This incentivizes Elon Musk to, if he can grow Tesla's market cap to a max of 8.5 trillion to get all tranches, as well as successfully roll out robotaxis, successfully roll out Optimus robots, and get more user adoption for full self-driving software, then he will get paid accordingly. And I think shareholders are happy with that, because if Tesla stock is going up to an $8.5 trillion market cap, Tesla shareholders are doing pretty well during that time period as well. So I would expect, just like last year, we see this vote approved as well.